Welcome to the Monkey's Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding nice stocks just for you. So all you have to do is just watching this entire video and decided if the presented stocks could be something for your portfolio. It doesn't get much easier than that. In return to all my preliminary research and hard work, I would really appreciate it if you would drop the subscribe button to become part of the Monkey's Stock Club family, so you will never miss a video again. Also drop the like button if you enjoyed the video, so that helps the YouTube algorithm to push my video. Please be aware that everything I say here is just my opinion and no investment recommendation. As you can see, I'm just a monkey and not an investment banker. Nevertheless, I have pretty nice analysis tools to value stocks and I want to share all the exciting stuff with you. And honestly, how do you feel when you are told, just look into Yahoo Finance and build your KPIs to evaluate a company? I think most people are scared off, and most of all it is a hard work to collect all the data. But don't worry, I'm there to do the groundwork and show you only the interesting results, so you can do the cool stuff. Please stick around for the entire video, so you don't miss any great chances to make big money. So, don't waste time, and let's get started with some numbers. Today we're gonna talk about Slack and SALESFORCE. They announced in an earnings call that it will buy workplace management app Slack for $27.7 billion in cash and stock. We will do comparison between both companies. In the first step we will use the high growth investing strategy. It is a long-term oriented strategy for stock picking of growth companies. The high growth investing strategy uses 6 key figures, which are suitable for filtering out the outstanding companies from an investment universe of fast-growing companies, even if they are not yet profitable. In a second step we will use the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. And last but not least we will do some scenarios for estimating the fair price by Peter Lynch. So we start with the high-growth investing strategy. First, an HGI score is calculated for each share according to a simple points system. The HGI score consists of 6 criteria for which 0 to 3 points are awarded. In total, a share can therefore receive a maximum of 18 points. On the IMAX screen you see both companies, with the 6 KPIs running from left to right. And we start right away with the first KPI. Enterprise value divided by sales actual. Enterprise value is a measure of the value of a company regardless of its financing. If you divide the enterprise value by sales, you get an important ratio for estimating the valuation of fast-growing but still loss-making technology companies. 3 points are given for values less than or equal to 8. 2 points for values greater than 8 and less than or equal to 10. And 1 point for values greater than 10 and less than or equal to 12. In the upper right corner you can see a diagram where you can compare the current score of both companies. SALESFORCE has an enterprise value divided by sales of 11.47, Slack has a value of 29.3. SALESFORCE gets 1 point, because the value is greater than 10 and less than or equal to 12. Slack does not get a point, because the value is greater than 12. The next KPI is the gross margin trailing 12 months. It results from the sales minus the direct costs divided by sales. The gross margin provides a good indication of the profitability of a business model. The higher the percentage, the more money a company has available for sales, marketing, research and development and capital. 3 points are awarded for values greater or equal to 75%. 2 points for values less than 75% and greater or equal to 65%, and 1 point for values less than 65% and greater than or equal to 50%. SALESFORCE has a gross margin of 67%, Slack has reached 87%. SALESFORCE gets 2 points, because the value is between 65 and 75%, Slack gets 3 points, because the value is greater than 75%. At the top of the tracking diagram both companies now have 3 points. The next KPI is the Rule of 40 score trailing 12 months. The sum of sales growth and free cash flow margin is calculated. The Rule of 40 is a simple key figure for assessing the efficiency of a company's growth and thus the quality of its business model. The higher the value the better the business model of the company. Values above 40 are considered attractive. 3 points are awarded for values greater than or equal to 50%. 2 points for values less than 50% and greater or equal to 45%, and 1 point for values less than 45% and greater than or equal to 40%. SALESFORCE has a Rule of 40 score of 54%, Slack has also 54%, Salesforce and Slack get 3 points because both are over 50%. The next KPI is the sales growth trailing 12 months. 3 points are awarded for values greater than or equal to 40%, 2 points for values less than 40% and greater or equal 30%, and 1 point for values less than 30% and greater than or equal to 20%. Below on the IMAX screen you can see the sales growth of both companies over the last 3 years. Salesforce has a sales growth trailing 12 months of 32, so 2 points for this. Slack has a sales growth trailing 12 months of 51, for this Slack gets 3 points. The next KPI is the debt ratio. The debt ratio results from the debt last quarter divided by equity last quarter. A debt ratio less than 1 indicates low debt, while a debt ratio greater than 2 indicates possible risks from debt. There are 3 points for values less than or equal to 0.5, 2 points for values greater than 0.5 and less than or equal to 1, and 1 point for values greater than 1 and less than or equal to 1.5. Salesforce has a debt ratio of 0.16, therefore 3 points. Slack has a debt ratio of 0.98, for this Slack gets 2 points. The next KPI is the PEG trailing 12 months. It is calculated by dividing the price per earnings ratio by the profit growth trailing 12 months. The PEG is one of the most important key figures for the assessment of already profitable growth stocks. If this ratio is between 0 and 1, this indicates an undervaluation. The PEG can only be calculated for companies that are already sustainably profitable. There are 3 points for values less than 1 and greater than 0. 2 points for values greater than or equal to 1 and less than 2. And 1 point for values greater than or equal to 2 and less than 4. Salesforce and Slack both get 0 points because either the EPS or the profit growth trailing is negative for 12 months. In total, both companies receive 11 out of a possible 18 points. With over 50% sales growth, Slack beats Salesforce. Both companies are thus in good to very good sales growth. In the area of expected profit growth, Slack is the clear winner. Also positive is the Rule of 40 of Salesforce and Slack with 54% each. The facts at Slack show that sales growth is not at the expense of profitability and that there is a very good ratio of growth to earnings. However, this does not apply to Salesforce at the moment, as it has a negative profit growth. More on this in a moment. Let's start with the quantitative analysis strategy. The investment strategy evaluates a share on the basis of 6 criteria that can lead to above-average performance. For each criterion one of the following values is assigned, +1 point, 0 points, or -1 point. The return on equity last year reflects the relationship between profit and equity. IT indicates how the equity of a company has earned interest during a financial period. A shareholder can see from the return on equity how profitable his investment in the company is. A+ point is given for values greater than 20%, a minus point for values less than 10%, and 0 points for values between 10 and 20%. On the top right you can see a diagram where you can always compare the current score of both companies. Salesforce has a return on equity of 0.4 and Slack of -79%. Both companies are getting a minus point. Next one is the EBIT margins. It is the ratio of EBIT to sales. High EBIT margins are a quality criterion for the investment risk. The higher the EBIT margin, the easier it is to manage declining sales. A+ point is given for values greater than 12%, a minus point for values less than 6%, and 0 points for values between 6 and 12%. Salesforce has an EBIT margin of 3 and Slack of -89%. Both companies get another minus point. Next KPI is the equity ratio. It is the ratio of equity to total capital. The equity ratio provides information about the credit rating of a company. Plus point is given for values greater than 25%, a minus point for values less than 15%, and 0 points for values between 15 and 25%. Salesforce has an equity ratio of 62 and Slack of 50%. Both companies get 1 plus point. It continues with the price per earnings ratio of the last 5 years. IT indicates after how many years you have doubled your stake, assuming that the profit remains constant. It is therefore a good indicator of whether a share is expensive or cheap. Plus point is given for values between 0 and 12, a minus point for values greater than 16 or less than 0 or not available, and 0 points for values between 12 and 16. Salesforce has a PE ratio 5 years of 130 and Slack of -69%. Both companies get another minus point. It continues with the current price per earnings ratio. The important factor here is the price per earnings estimated by analysts for the current fiscal year. A+ point is given for values between 0 and 12, A minus point for values greater than 16 or less than 0, and 0 points for values between 12 and 16. Salesforce has a current PE ratio of 66 and Slack of minus 339%. Both companies get another minus point. The next KPI is the profit growth of the current fiscal year compared to the next fiscal year. The estimated earnings per share for the next fiscal year are compared with the estimated earnings per share for the current fiscal year. A plus point is given for values greater than 5%, a minus point for values less than minus 5%, and 0 points if otherwise. The expected profit growth for Salesforce is currently minus 0.5%, with Slack performed much better with an outstanding profit growth of 33%. Salesforce gets 0 and Slack 1 point. In total, Salesforce minus 3 and Slack minus 2 points out of 6 possible points. Fortunately, both companies show a very high equity ratio. One can see that Slack has strong weaknesses in return on equity and in the EBIT margin. If in the future the high sales would be missing, this could mean a high risk. And last but not least, we will calculate the fair value by the Peter Lynch formula. Above you can see an overview of the two results of the applied analyses. On the iMac screen you see the following calculation. First you see the earnings per share of the last 3 years, and on the right side the estimated earnings per share for the current and next year. If we compare EPS 22 with EPS 19 and divide it by 4, we get the average profit growth. The average profit growth for Salesforce is 165%. If you multiply that 165% by the EPS 22 of $3.73, we get a fair price of $615. Comparing this to the current price of $221, the gap is up 178%. For Slack we cannot calculate a fair value, because the earnings per share are still negative. As I mentioned, Salesforce announced in an earnings call that it will buy workplace management app Slack for $27.7 billion in cash and stock. Salesforce and Slack have a common, four-pained enemy, Microsoft. Microsoft's workplace management play, Teams, is an increasingly painful thorn in Slack's side, while Salesforce lost an arm wrestling match for LinkedIn with Microsoft in 2016. Software acquisitions have been as few and far between in 2020 as hugs or concerts. The shift to remote catapulted the industry, inflating valuations and putting potential buyouts out of reach. But added competition, from Google and Zoom as well as Microsoft, brought Slack back down to what Salesforce considered a reasonable price. So it remains exciting. That was it from my side. I hope you enjoyed the video. If so, then drop the like button for the YouTube algorithm. Press the bell to get a notification when I release new content. And please drop the subscribe button and become part of the Monkey Stock Club family. So have a nice day and hopefully we will meet again. Bye bye.